So imagine this: two identical houses, same size, same design, same city, but one is worth 30% more than the other. Why? It's not the location, it's not the neighborhood, it's not even the economy. It's water. And this is exactly what's quietly transforming real estate across the modern West. For decades, property value was driven by three simple things: location, infrastructure, and demand. But now, there's a new factor entering the equation, and most people still aren't paying attention: water scarcity. Cities that once seemed perfect, like parts of California, Arizona, and Nevada, are starting to face a serious problem. They're running out of water, and not in some distant future, right now. Reservoirs are shrinking, groundwater levels are dropping, and governments are being forced to take action. In some areas, all new housing developments are being restricted, not because there's no land, but because there's no water to support them. There have already been cases where entire housing projects were delayed or canceled simply because officials couldn't guarantee a long-term water supply. Think about that for a second. You have the land, you have the funding, you have the demand, but you still can't build. Now think about what that does to real estate. If you can't build more homes, supply becomes limited, and when supply is limited, prices go up. But here's where it gets even more interesting. Not all properties are affected equally. Homes with reliable water access, modern plumbing systems, water-efficient designs, or proximity to sustainable water sources are becoming more valuable. And we're even starting to see something new. Water risk is becoming a hidden property factor. Just like flood zones or earthquake risks, buyers and investors are beginning to ask: homes in drought-prone areas with outdated infrastructure or heavy dependence on declining water sources. In some regions, buyers are now asking questions like, where does this home get its water? Is this area at risk of future shortages? Will this property still be livable in 10 years? Will water costs rise over time? These are questions that no one was asking before, but now they're influencing million-dollar decisions. And here's something even more important. Water scarcity doesn't just affect availability. It affects cost. As water becomes more limited, it becomes more expensive to store, transport, and treat, which means homeowners in certain areas may face rising utility bills year after year, and higher living costs directly reduce property demand. Because buyers don't just look at the price of a home, they look at the cost of living in it. And it doesn't stop at residential real estate. Commercial real estate is also being reshaped. Think about industries that depend heavily on water: agriculture, manufacturing, energy production, even tech data centers. Data centers, for example, require massive amounts of water for cooling. So when water becomes unreliable, they can't operate efficiently. And when they relocate, they take jobs and economic activity with them. If water becomes unreliable, businesses move. And when businesses move, jobs disappear. And when jobs disappear, property values drop. So what we're seeing isn't just a housing issue, it's a chain reaction. Water scarcity leads to economic shifts, and economic shifts transform real estate. And there's another layer to this. Climate change is making everything more unpredictable. Some regions are becoming drier. Others are experiencing extreme weather swings. This makes long-term real estate planning much harder. Because a location that seems safe today might not be safe 10 or 20 years from now. That's why investors are starting to think differently. Instead of just asking, is this a good location? They're asking, is this a sustainable location? Will this area still have resources in the future? Some cities are already adapting. They're investing in water recycling systems, desalination plants, smart water management technologies, and stricter usage regulations. But these solutions take time. They require massive investment, infrastructure changes, and long-term planning. And time is something many regions don't have. That's why smart investors are already moving early. They're focusing on regions with stable water supplies, better environmental planning, and long-term sustainability strategies. Because in the future, the most valuable properties won't just be in prime locations. They'll be in places where basic resources, like water, are secure. And this creates a new kind of opportunity. Regions with stable water access, cooler climates, and strong infrastructure could see a massive rise in demand, while others may slowly decline. Not suddenly, but gradually, quietly. So the real question is, are we entering a world where water determines wealth? Because if that's true, then real estate isn't just about land anymore. It's about survival. And the people who understand this early, the ones who see these invisible shifts before everyone else, won't just adapt, they'll have the advantage. And this is just the beginning. If you enjoy simple explanations of complex topics like this, make sure to subscribe to the channel. More videos breaking down finance, psychology, and the world around us are coming soon. So subscribe